Hey guys, Max here, and yesterday was another green day for the markets, though not quite as strong as the days before. Much of the news is just more of the same really. This is now a 3-day long rally, which is much appreciated by those who have seen their portfolios getting hammered recently, and it's all based on the fact that the Federal Reserve is looking very dovish. They don't want to raise rates too hard as it will damage markets. Instead, they'd rather let inflation run high, which is good for asset prices in the short term. In the long run though, it's probably even worse. Worse inflation is clearly the greater of two evils, in my opinion at least. Interest rates are still going to have to rise, but that rise will come when people have even less disposable income, when companies' earnings and their revenues are suffering, and there's a decent chance that this failure by the Fed to act against inflation will result in a recession. From there, who knows where it will go. Usually a recession drops inflation on its own, but it's also possible we enter a period of stagflation, where the economy tanks and inflation stays high, which is a pretty difficult situation to deal with because it's really counterintuitive. The reality is here, the Fed's path could change in the future, and I think it probably will at some point, but really it's already too late. And the Fed's actions right now might well cause a small rally, but in the long run, even the Fed can't stop a bubble from popping, and they can just delay it all they like and make the pain so much worse. So with that little rant out of the way, what actually happened in the markets yesterday? Well, markets were up across the board. American equities were pretty strong. The rally did seem to slow down a bit though. The S&P 500 was up 1.2% for the day and the Nasdaq was up 1.3%. In Europe, it was a similar story. Again, a rally, but less strong than the days before. The FTSE 100 was up 1.2% and the Stoxx 600 was up 0.4%. As usual, there are plenty of rumours around Ukraine and Russia, the negotiations, the politics and everything like that. Maybe we are nearing the end of the war or a ceasefire. This kind of stuff is impossible to verify for us. Yesterday, we saw the same thing. Some media outlets were claiming that Ukraine becoming a neutral state like Switzerland is a possible outcome from this, whereas other media outlets came out and claimed that it's been categorically denied by the officials of Ukraine. Who knows what the reality is? All we know for sure is that we don't know. Now, the war itself has not stopped. This is a huge topic in and of itself, and it needs an entire video really, and it will have one recapping everything that's happened over recent days in a couple days. But for now though, Lviv, the city in the west of the country, which has mostly been unhurt by the war, was bombed by Russia, which is an escalation. There's still plenty of fighting on the ground, though that's slightly lighter than it was a couple of weeks ago when Russian forces were still trying to actively take control of contested cities. I don't really want to go into this too much. Personally though, I don't think we're particularly close to the end of the war. Maybe a slowdown, but I think the media here is being too optimistic. Of course though, I was wrong about Ukraine being invaded in the first place, so maybe I know nothing, maybe you want to completely ignore me. There is also plenty of talk in the media about Putin being in trouble. Maybe the oligarchs are plotting against him. A top military general on the ground in Ukraine has reportedly been arrested by the FSB. Here again though, we just don't know what the truth is. Another big story going around is that maybe China has picked a side and gone actually slightly against Russia. Maybe that alliance between them is not so strong. The reality is here again, we just don't know if any of these rumours are true themselves. We don't know if they are propaganda from Ukraine or Russia or from China or the US or the UK or anywhere. This could all even just be overzealous reporters trying to find the next biggest story before anyone else. This all needs a whole video for itself, but don't you worry, there will be one coming out in a few days. So, in the currency world, what happened? Well, the US dollar fell for another day in a row, again probably based on the idea that inflation is going to get far worse in the US. Relatively speaking though, the dollar is still very strong, so don't get it twisted. Bond yields are advancing once more in the US. The US 10-year Treasury yield is up another couple basis points now at 2.2%, a new high for the last 3 years. Gold and oil prices both saw reversals to their declines recently and they rallied a bit. Oil prices are up all over and especially in the US where WTI crude oil is now sitting at $103 a barrel. It's a shame to see, but it's not exactly surprising though. Oil price moves have been crazy, irrational and volatile, and as we all know, volatility moves in both directions. Gold prices have been rising as well, up 1.5% from the day before, now at $1,940 an ounce. Probably they're going to hover around $1,900 for a bit, as they used to hover around $1,800 a couple months ago. Now in the world of crypto, what's going on? Well, it's pretty consistent overnight, no major shifts. Bitcoin is still sitting at around about $40,000. Ethereum is still sitting at around about $2,800, so pretty stable for the last few days. Altcoins across the rest of the market have been a little bit less stable. They fell 2% for the most part, but some of them, of course, went down more. Luna lost 6% yesterday, but very few of them were actually positive. So that's pretty much the markets. What's the big story here? Well, a big one is that the Bank of England raised interest rates again, 2 months in a row now, to 0.75%. Now, the Bank of England is far more willing to raise rates than most central banks. It's worth noting that inflation in the UK is actually far lower than in the US too. Firstly, there's a more accurate reading of the CPI. It's not perfect, but there is no onus equivalent rent manipulation going on, for example, and the CPI figure is only just above 5%. Now, predictions for inflation in the UK here are for it to spike into the future, especially with increasing energy costs as a result of the war in Ukraine. Natural gas prices, oil, everything's just peaking a lot, and we're expecting to see inflation peak at above 8%. Now, it is good news that the Bank of England is actually willing to raise rates though. This will provide some confidence for the economy here long term, even if it causes some short-term pain. It's absolutely necessary. Now, why is the UK's central bank more willing to act than the US's? Well, there are a few reasons, and we're not 100% sure as always. One potential reason is that asset prices are just valued far less on stock markets here in the UK. There's less room for them to fall. The bubble in the US markets has been huge over the last year, and that's not really a thing in the UK. There are no Pelotons valued at 100 PEs or Teslas at 300 PEs, so there's just less room to fall. In general, I think this is due to just a more conservative financial market. A good example of this is Deliveroo, a company broadly comparable to DoorDash, Uber Eats, or one of many other companies like that ferries food from a restaurant to your door. But their IPO last year in the UK saw almost no hype, and British institutional investors just didn't want to buy it. Now, even that company has seen a huge drop in its share price, but compared to US companies, it's basically identical and it's far, far cheaper. Deliveroo, for example, is worth just under $3 billion, with revenues of $2.4 billion. Now, DoorDash, a company that is broadly comparable, is worth $33 billion, with revenues of just under $5 billion. Basically, if DoorDash were British, it'd probably be worth about $6 billion, not 33. The markets here are just different, and that's the point I'm trying to make. Obviously, I know the companies are not perfect analogues. Now, another reason the Bank of England might be more willing to act against inflation is that our government has inflation-linked bonds or gilts, quite a lot of them actually, so if inflation does go too high, it will also get very expensive for the British government to service their debts. Unlike in the US, where almost all government debt is interest rate linked, there are more incentives for the government to let inflation take hold in the US than over here. Now finally, really quickly, Russia is close to defaulting on their debts. Not companies in Russia, like the situation with Evergrande in China and other companies over there, but the Russian government itself. Now there is a 30-day grace period for certain bonds to be paid, but it looks like those bonds may just not get paid, which would be the first time Russia's done this since 1918, when the Bolsheviks didn't pay the Tsar's debts. The Russian government is of course saying that there's no problem here, all is fine, but the reality looks to be a fair bit different. On top of that, there are other major problems here. 50% of Russian central bank's reserves are held in foreign currencies, completely frozen, so not under their control at all. The Russian stock exchange still remains entirely closed, and it's not going to open anytime soon. If it does open, it will collapse probably in excess of 90%, so no news there, but not a good thing for Russia anyway. Really, again, this topic needs its own entire video. It's got so many twists and turns and intricacies and nuances that I just can't even start to cover it all right now, so look out for that video in the future. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.